Ladies and gentlemen, in the last 2 days, Bitcoin had an opportunity. It bounced upwards from 93,000, forming an uptrending support zone on a short-term basis and reached the doorstep of 100,000, a major psychological resistance zone. Unfortunately, it was unable to break through. It was rejected. It broke down from the short-term structure and it went right back down to 95,000. A big drop there on the short term for Bitcoin, driven mainly, in my view, not by Bitcoin itself, but by traditional markets. You can see here on the S&P 500, a big drop on a daily candle, dropping around close to 200 points, okay, 100 points, I should say, in one single candle, plummeting and causing the other markets, cryptocurrency, for example, to go downwards. Now, it's not all bad news here. In fact, it's getting very intense. What we have here is a potential higher low, which could be going into a higher high, which would form a short-term upwards trend. But more specifically, and this is the very important part you need to hear very clearly, Bitcoin is now in a price range that spans a mere 3,000 US dollars. It is consolidating and compressing very heavily, unsustainably heavily, between the pi cycle line in blue and the Gaussian channel center line in green. It's been doing that for about 2 weeks now, going on 3 weeks. This compression cannot last much longer. A big move on Bitcoin is literally coming within days. We'll discuss that today as well. A lot of recapping in this video, a lot of making you aware of the situation, and we'll get into it now. I'll try and keep it short and sweet today, guys. There's not too much to get into, but what I need to get into is very important. Before we do so, though, the Bitfinex exchange, it's global, non-KYC. You can sign up from anywhere in the world without linking your identity to the exchange if you don't want to. It's very useful for various reasons. It's never been hacked before, which is very big. Of course, you want an exchange that has historically been reliable. You don't want to lose your funds on the exchange. So it's never been hacked before. Good track record. It's been around for 3.5 years. And also, it has a reserves fund in case it is hacked, so you can get reimbursed on the funds you may lose. So very secure, very low in trading fees, globally accessible. You cannot go wrong. This is the exchange I use personally. And with my referral link down below, you can get an exclusive 15% trading fee discount attached to your account for life, as well as access to a reward center with over 8,000 US dollars in rewards that can be added to your account upon completing various tasks. So sign up with my referral link down below, get those bonuses. Guys, let's get into it. The basis of the Bitcoin macro structure right now stems back from prior cycles. It's not a textbook horizontal range like we saw over here, for example, or a textbook pattern-based range. It's a range based on diagonal lines stemming backwards from 2017 as the resistance zone, going through to 2021, and support lines stemming backwards from 2021. As you can see, if we zoom in, those two diagonal lines do form a very important macro structure, a very clearly non-coincidental macro structure. For this to be a coincidence with lines stemming backwards in one case all the way back 8 years would be absolutely insane. Clearly, these are the levels we need to be watching. Clearly, the resistance zone right now is at about 110,000 and the support zone is at about 92,000, and that gives us a big price range to consolidate within. And it's a price range that's not actually compressing. So it's a price range that's actually expanding over time, which means that consolidation can last a long period of time. And so that doesn't really help us much. It doesn't really tell us when the next thing's going to happen. But what does tell us when the next thing is going to happen are lines like the Gaussian channel and lines like the pi cycle indicator. But before we get into that, let's just understand what's actually happened within this range. We've seen one move to the upside, right? Coming back down, another move to the upside, coming back down again, and consolidation. Now, what's the threat here? Well, the threat is we see a double top formation where on 2 separate occasions we fail to break the same resistance region and then we break down as a whole. That is how we mark the top in the 2021 cycle. And that is the fear, the deja vu, that a lot of people are having right now, okay? They're recognizing this pattern as a bearish pattern for that reason. And I think it's not that easy, right? I think it's not necessarily, a good strategy to be so defeatist and pessimistic and think, oh, it's a double top, we're going downwards. Specifically because, well, first and foremost, we're in a 4-year cycle, we're in an upwards trend, of course, but because we've seen so much hesitation for the price to drop in the last 3 weeks. On the way down to the macro support, which we should be breaking down easily if it was a double top, we are seeing 3 weeks of consolidation and compression. Literally, the price is telling us that it's trying not to fall. The buyers are trying their best to keep the price elevated and to stop this structure from fully playing out. Now, within this consolidation of 3 weeks, we have seen intense compression start to occur, as seen by the Bollinger Bands, a very textbook indicator, a 101 indicator for measuring compression. And you can see those Bollinger Bands are as tight as they have been throughout this entire macro range, meaning throughout this entire macro range since November, we are seeing right now the most compression on the Bitcoin chart we have seen the most compression, the most tension. When you have tension, when you have compression, you need to see a release, you need to see an explosion, and that is what is coming next. Now, what are the specific levels that Bitcoin is compressing against? Because if you look at it like this, it looks like it's just magic, like there's nothing there, we're just going sideways. No, there actually are levels that are very important here. For one, we have the Pi cycle indicator providing a very important support line in blue, which is clearly acting as the basis for the downside support. And we have the Gaussian channel on the daily chart, the center line, which is clearly acting as the resistance zone right there. You can see that center line in green, knocking against the top of that, bumping our heads against that for weeks on end. And just like that in blue, we're bumping our bottoms against, I suppose, against that support zone. And this compression is occurring, and it's getting tighter and tighter and tighter per day. And eventually, right, within days, we're going to reach a point where we cannot compress anymore. The price range is literally too small, and any small fluctuation of volatility, any small catalyst will move us aggressively to the upside or aggressively to the downside. That's what happens when you see intense compression. You see a big move as a result of it. And right now we're in a $3,000 price range. Every day it's getting narrower and narrower and narrower by hundreds of US dollars. I'd expect that within days, we see a move here on Bitcoin. We see a decision. And it's not just Bitcoin that's seeing this compression. As we've mentioned in prior videos, it's Ethereum as well. We have Ethereum bumping its head against a major macro resistance level, which has previously acted as support and resistance on occasions that I'm circling. We can't just hover at this level forever. It's trying its best not to fall any further, but eventually it's going to bump its head too much and it's going to get knocked back down. So we have to move upwards as soon as possible. We have the altcoin market doing a similar thing with a triangle formation, the top of that triangle being formed by a resistance line and the bottom being formed by the bull market support band. And we have alternative markets like traditional markets, okay? I suppose calling traditional markets alternative is strange, but I meant it contextually. We have traditional markets with a horizontal resistance level that's been forming since December. It's failed to break above that at this point in time, and the support zone comes from the bull market support band. So just like Bitcoin, right? Just like the altcoin market, just like Ethereum, we're seeing this compression across the board, even on charts that are not measured via the damn US dollar, even on charts that are measured in percentage format, like the USDT dominance chart. We have this major parallel resistance channel in pink. And right now, we're seeing resistance at that parallel resistance channel. We want to be dropping downwards. USDT dominance going down is good for the markets, by the way. And right now, we have that major compression with that Gaussian channel top line and the pink line there. You know, there's not much longer we can see that for. We have to make a move here. So compression's happening across the board. Now, the question is, what's likely to happen here? Are we likely to go upwards? Are we likely to go downwards? And the more important question is, how do we react, right? Because you don't really make money by predicting. You make money by reacting, right? And you save money by reacting as well. It's all well and good saying we're going to 200,000, we're going to 400,000, we're going to $1 million, right? Like people say, which I disagree with, by the way. But if you don't actually buy, you don't make any money, right? You just watch the chart go upwards. And the same thing to the downside. So what is likely to happen here? Well, I think the only way we can ever kind of come to a conclusion about what is likely when it comes to a major decision like this is understanding the context in regards to the macro cycle. Because if we were to break down here, we would not just be moving downwards, we would be breaking below major macro support levels on Bitcoin, right? On Ethereum, on the total cryptocurrency market cap, and on actually the S&P 500. So we're not just talking about a regular break upwards, we're talking about damaging the cycle potentially. It wouldn't necessarily destroy the bull market. That's another question. That's something we can get into in a future video. I don't want to overcomplicate it, but it would do a lot of damage, okay? So given the stakes here to the downside, and given what we are knowing about the cycle, which is that we are in a bull market, we are in the bullish part of the cycle, it stands to reason that the logical move here is to go upwards, is to not risk the macro support structures, especially given the fact that we've seen a 3.5-month consolidation. It seems like the macro cycle wants us to go upwards. And for that reason, I would say that is probably the more likely maneuver. That is probably the more likely thing we do here. It would be very weird to see a double top formation and a macro breakdown, and then later a continuation to the upside. That would be very, very strange from a macro cycle perspective. So assuming the macro cycle pertains, assuming it remains in balance, we should probably be moving upwards here. And for that reason, I think we will be. But that doesn't necessarily mean I think we should be diving all into the market right now. Because even though I think the most likely move is upwards, I actually recognize that in order to get validation on that, in order to get confirmation on that, you'd only literally need to be waiting for like 3 or 4% move to the upside. So why not wait? Why not, miss out on the 3 or 4% and get the certainty that you're actually going to be moving upwards. There's no point jumping in right now when you can just wait for a very, very small move and get the actual confirmation of it occurring, especially with consolidation this intense, right? I personally would be waiting, because if I recognize that, well, first of all, you're not missing out on much by waiting, you're only missing out on a few percent. And second of all, I recognize that if we did move downwards here, there's a higher likelihood that it could be very explosive and you could get wrecked very, very, very quickly, which would not be ideal if you're asleep or something like that, as it is a 24/7 market. So that's my opinion on the market right now, guys. Really not much else to say, just highlighting that compression, highlighting that it'll be coming to an end soon, and also giving you an idea about how you should be reacting. And obviously that's my opinion, it's not financial advice. I'm not responsible for what you do at all. It's your decision, but that's personally how I'm viewing the situation right now. Bitfinex Exchange, again, like we mentioned before, it's global non-KYC. It's never been hacked before. It's very low in trading fees. And with my link down below, you can get an even further 15% trading fee discount on every single buy and sell you make on this exchange attached to your account for life. Literally just for signing up with my referral link, you get that. You're saving literally thousands potentially by doing that. So go ahead and do it down below. The link is there. And finally, the last thing I'll mention is my VIP group on Telegram. If you're interested in getting altcoin trading signals 4 times a week, you can get them on Telegram. That's where I post them, okay? And you also get access to a group chat with 160 VIP members where you can discuss the market 24/7 with them if you wish to do so. Share charts, share ideas, share news, whatever you want to do. It's been useful in the past and no doubt it will be useful in the future. So check it out, guys. Thank you for watching. Hope you enjoyed, and I'll catch you soon.